Good evening, future Maryland home buyers. Thank you so much for being here. My name is Jackie Muick, Advocacy and Communications Administrator for Maryland Realtors. I want to welcome you to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us, we have Mary Lynch, a realtor with Cummings & Co. Realtors, George Kuda, a lender from Primary Residential Mortgage, Jim Hall from Freddie Mac, and Catherine Kramer-Dale and Frank Bamunde from Maryland Department of Housing and Community Development. Tonight, you'll get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and will be sent out to all attendees, likely on Tuesday due to the holiday weekend. We encourage your questions and we look forward to answering them. Please post all questions in the Q&A box below at the bottom of your Zoom screen. With that, get your questions ready. We're going to go ahead and get started with our realtor member, Mary.
Wonderful. Thank you so much for the opportunity. Let me share my screen here. I think I need to do share, and then I need to go to view a slideshow. Okay, so we are going to have the roadmap to a successful home purchase today. As Jackie had mentioned, my name is Mary Lynch. I am born and raised in Baltimore. I've been here my whole life, stayed for college, raised my children here, actually have a University of Maryland graduate daughter. I vacation here in Ocean City, love the Orioles, love the Ravens, certainly love the Crabs. My specialty area is going to be Baltimore County, Baltimore City, and Harford County for the most part. In addition to that, I'm very passionate about helping folks buy the right house, and I am the chair for the National Aging and Police Council in Greater Baltimore. Truly, after 28 years in the business, first-time home buyers are certainly my favorite. And honestly, at any age, I've had them as young as 19, and I've had them, believe it or not, in their 70s. So being a first-time home buyer at any age is just very exciting. Going to go over some of the benefits of owning a home. Certainly there's financial benefits, there's stability and control, and there's lifestyle and long-term planning. Some of those look like building equity, right? With each mortgage payment, you're going to be building wealth instead of paying your landlord's mortgage, right? We have appreciation. Homes are typically going to increase in value, and so that's a good way for long-term financial goals. With most monthly mortgage payments, you're going to have a fixed rate, so you're going to really know what you're paying each month as opposed to rents that can rise. Tax benefits, talk to your tax professional, but usually interest and taxes are deductible. And it's just a way to really sort of force your savings, right? By making that payment each month, you know it's going to something that's going to be valuable in the long run. Again, there's no rent increases. You're locked in instead of waiting for the landlord to increase your monthly rent. You're allowed to personalize, right? In most rental situations, you're not able to remodel, paint, or do what you like and make it your own. Certainly there's that sense of community and being in a neighborhood, meeting your neighbors and being invited to local events and kids' schools and whatnot. And usually purchases are going to allow you to have a little bit more space and certainly outdoor areas. You also are able to have a lifestyle and long-term planning, right? You're building roots, great generational wealth. No surprises, right? You have a house, you're staying in that house no matter what's going on with the landlord's finances. And what about pets, right? You can have pets. There are some rules against certain breeds when it comes to landlords. And again, if you need to make any changes, if you have accessibility issues or you want to put an addition on your home, you can do that with home ownership. So now that you've heard some of the benefits, we're going to go 10 quick, easy steps to home ownership. Now, this is where I always like to joke. It's sort of like which came first, the chicken or the egg, right? Depending on whether you talk to a real estate agent or a lender, right? They might have a different opinion of what comes first, right? I always believe that you should figure out, or at least think about what area you want to live in, right? Maryland, it's so amazing. We're actually called Little America, right? We have every single natural feature except a desert here in Maryland. We have mountains and beaches and cities and country and farmland, right? So you really have so many different options when you're buying in Maryland, depending on where you're looking. You want to think about location for multiple reasons prior to really beginning that search, right? Do you want to be in the city? Do you want to be in the county? Are you looking for a goal of being close to work or for family? Do you have a specific need like a large yard or a garage? And the reason that I'm saying that, and certainly you can consult with a real estate agent, but for instance, if you want someone that crosses the line. We want you to stay in Maryland. Certainly, as a Maryland realtor, I want you to stay in our beautiful state. But if you're considering going to Pennsylvania or going to Delaware, you might want somebody that is able to show you houses in both of those areas. Also, such as myself, if you would want to live in Ocean City, Maryland, I would not be the agent for you, right? I think for the most part, you want to have somebody that specializes in that area. So it's a good thing to just consider the areas that you're looking at. How to choose an agent, right? So referrals are always great. You want to know somebody that's in that area, confirm that they know what they're doing and the different rules in that area. You can certainly ask friends, you can ask family, you can ask coworkers for a referral. There's a lot of ways you can also check online reviews, right? To see if someone specializes in the area or knows about the area that you're looking. You are certainly welcome to call me. I can help whether I work in the area or not. Being in the business for almost 3 decades now, I can certainly put you in the hands of a more than capable person, as well as everyone else on this call. Pre-approval. This is the whole, a lot of folks say pre-approval first, right? And I'm all for getting an understanding. That's George Kuda, right? Pre-approval. You're going to hear that a lot. Get the pre-approval. My piece on the pre-approval is to please try to find a local lender. My buddy George Kuda, that's on the call today, that'll be talking to you in a minute, right? He's a local guy and he's been around for a long time and does a fantastic job. The national lenders out there have great intentions, right? I'm sure they do a fine job, but Maryland does have some little pieces that are a little unique. And it's really best for multiple reasons to work, in my opinion, with someone locally. Number one, we see them every day, right? We see them in the community and in the industry. And number two, they understand Maryland real estate. Certainly incentives depending on the areas that you're looking also, right? There's different loan products that are available in different areas. There's different grants, different incentives that might be beneficial, area specific. And a local person's going to certainly know that a lot more than a national lender. And if you don't know your lender yet, you can certainly ask for referrals. Real estate agents are a great way to get lender referrals, as are all of the other folks that we talked about, your coworkers, your friends and family, anybody that's had a great experience. Just because you're pre-approved for amount doesn't mean that that's what you want to spend, right? You still have to come up with a budget and decide what your lifestyle looks like and where you are really comfortable with spending the money. And you're going to take into account certainly not only the price of the house, but if there's maintenance that needs to be done to the house or upgrades or anything else that goes with your lifestyle to work with that budget. Just because you can get a pre-approved for it doesn't mean that you want to be strapped with that large of a payment. Timeline. I get this question all of the time, right? A lot of people want to start looking at houses today, but they don't, maybe they're in a lease and they can't move out for a year from now, right? It's okay to shop online and to look, to see ideas of neighborhoods. We are in a very right now a market, right, where things are moving still pretty quickly. And so oftentimes when you fall in love with the house to the time that you get those keys, we're usually looking at a max of 60 days. And George will talk about that a little bit more. That's usually because that's how long your rate, your interest rate's going to be guaranteed for, right? So I always like to tell my folks, If it's a vacant house that you're looking at, if it's something where the sellers have already figured out where they are going, sometimes we can get in there in 30 days. It's going to usually be that sweet spot of between those two numbers. So take that into consideration if you have to give notice for a rental, or what you need to do as far as moving. You want to give yourself plenty of time to be able to find your home. Number 6, right? We had our budget in mind and we know what area we want to live in. So then what are our must-haves and our would-be nices, right? I always like to have 2 lists. I like to have I have to have this, Mary, and then in an ideal situation, we would love to have blank, right? So that's where you sort of go, how many bedrooms do you need? How many bathrooms do you need? Do you need off-street parking? Would you like a fenced yard? Maybe you have a pet, right? What about the rules? Sometimes there are neighborhoods that have home associations, right? And maybe you drive a company vehicle and you bring that home at night. Some of them have rules against that. So they are all things that you want to think about. Also, just recently was showing a house, and after 5 or 6 homes, my client said, my china closet won't fit in here. And I said, your china closet? I didn't know we were talking about a china closet, right? So if there's anything that you love and is an absolute deal breaker for you, relay that information to your agent, right? Because if the china closet has to come and there's not room for it, then we're looking at the wrong house. Next step, we're going to go on home tours, right? We're going to take that criteria, take your budget, take your timeline, and we're going to start seeing stuff. I always say that seeing houses that maybe aren't the best or help us get to the better one just as well as houses that are great, right? So that's really an important time for you to give feedback to your agent. Let them know, this is what I like and this is what I don't like, and that will help get closer to, the one that you want to put a ring on, right? You find the house, you fall in love. Good week for that, right? Find the house, you fall in love. You and your agent are going to sit down, go through comparables, go through maybe condition, go through all of the things that come up with what a fair negotiating offer may be for that property. And we're just going to go ahead here in number 8 and assume that you're going to get that house, right? We're going to think positively. Sometimes it's back and forth and it doesn't happen that quickly, and that's okay. I can tell you, after 28 years, every buyer has always gotten the house that they were supposed to be in. Sometimes there's tears and they think that they lost the right one, but I assure you, you will end up with a house that was meant for you. Number 9, inspect, 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 okay? Especially as a first-time home buyer. Unless you are a general contractor, right, and really know everything about home construction, highly recommend inspections. That also may change depending on age of house, location of house, utilities of house, right? Usually we're getting a general home inspection, which covers the majority of the systems and condition of house. But you might not be on public water, right? You might need a well inspection. There could be septic inspections. There's additional things, but definitely per the house, you and your agent will want to discuss what is important to you and really make sure that you have a good understanding of what you are purchasing. Number 10, we're already here. Time to celebrate, right? You got the keys. I also get this question all the time. I know settlement is on, let's say the 29th. When do I get to move in? The second that you sign, the majority of the time, you're getting those keys and it's time to, say yes to the address, right? It's yours at that point. So a quick review, you're going to determine where you want to live, at least a ballpark. Doesn't need to be the street, but certainly the area. You're going to find the right agent. I'd be honored if you're looking in my area for you to give me a call. You're going to get that loan pre-approved, determine your budget, set that timeline, discuss your must-haves and your wants. Then you get out there and go house hunting, make a fair offer, schedule that home inspection, close the sale, and you move on in. Sounds easy, right? It is. It's pretty easy. Common first-time home buyers and mistakes, and then we're done, I promise. not getting pre-approved first. George is going to really nail that home too. Overlooking extra costs such as property taxes and HOA fees and maybe even maintenance, right? Looking at that roof, not really sure if you have a year left or if you have 10 years left. That's all important things to pay attention for. Buying more house than you can afford. Really make sure that you take into consideration your lifestyle and other things and try not to max out your affordability. Don't skip the home inspection. Too many regrets there. And letting emotions override smart decision making, right? This is a big purchase, and you really want to make sure that you consult with professionals. Your real estate agent will certainly be able to help you to make sure that you're making a good investment, and always work with a trusted realtor. That's it for me. I'm super excited to maybe take some questions. You got this. It's totally obtainable, and I hope 2025 is the year for you to become a homeowner. Thanks again for the opportunity.
Thank you so much, Mary. That was wonderful. We do have a couple questions already coming in the chat right before we get to you, George. Um, so real quick, let's get through some of these. And if you watching have anything to add, please feel free. One question, you did mention a rule about bringing a company vehicle home, and that is a question that one of our attendees wants to know more about, is what that rule is and kind of what to look out for.
Yeah, sure. So that usually will be condo associations or home associations, right? So that's going to be specific to the neighborhood. And when I say bringing a car home, a lot of times that's like a big, let's think of like an Xfinity or a Verizon wrapped van, right? Something with a big telephone number across it. It really is going to be community specific, but it's important if you have that work vehicle to relay that to your agent to have an understanding. Some neighborhoods are stricter than others about it.
Another question, if you're not on public water, how, and you have to get that well inspection, how much could a buyer expect to pay for a well inspection?
Sure. And well inspections. So you understand there's actually two things that you're inspecting for, right? You inspect for gallons per minute, right? That means can you flush the toilet, do a load of laundry, and someone shower at the same time, right? So you want to make sure you have enough water to do the daily activities of your house, right? There are two of them that happen, and you're really between the well yield and the potability. Potability means that it's safe to drink, right? I'm on a well right now and I'm drinking well water. And so you want to have that tested on occasion. There could be something wrong with the system, right? Maybe dirt. Sometimes it's even like a bug that gets in there. And then there's a process to take care of that. You're looking for around $450 to $550 for both of those, the potability and the yield test.
If I skip the home inspection, then could I perhaps bring in someone who I know can inspect it instead?
It's a big no-no, right? And everybody brings their dad and their uncle, and we love them. We're used to dad and uncle coming, and we really respect that they know a lot of stuff, right? The truth of the matter is that in 28 years, I still on occasion walk in and see furnaces that I've never seen before, right? You'd be amazed at how many different systems in a house that you truly need a professional to look at. So I know everybody's cutting pennies nowadays, and home inspections are a couple $100, but I tell you, it's the best money that you will ever spend. Possibly could at times even stop you from buying that house and then finding another house that meets your needs more. So, even though you have people that I'm sure are skilled maybe in certain industries, like a great plumber or a great electrician, right? Highly recommend a general home inspector that will be able to inspect all parts of the home.
As a follow-up to this question before we move on, say that there is a buyer who really wants this house and does make the decision to skip that home inspection. Are they able to, after the fact, after settlement, get a home inspection?
They are. They are. You are absolutely welcome to inspect your own house at any time, right? The difference in that, though, is that you already own it, okay? And so by having a home inspection prior to you getting the keys and owning it, you might be able to negotiate some repairs. I can't tell you how many times the sellers aren't even aware of things that are potential issues with their house, and they're living in it already, sometimes for decades. So I can't stress to you enough the importance. Why take that risk of that repair after ownership? Get it done prior.
Thank you so much, Mary. That is all of the questions we have currently. If you have more questions for Mary as we continue, please feel free to put it in the chat. Mary's able to stick around till the end, and we'll have another Q&A where we can talk about realtor questions again as well. Thank you so much, Mary. And I'm going to pass it off to George, our lender for the evening.
Thank you, Jackie. Excellent job, Mary. That is some awesome information. I'm learning things right now. I've been doing this for 24 years and I'm still learning things. But first of all, thank you for having me. It's a real honor to be here. This panel is experts from all aspects of this industry, so it's a real honor to be here. I also want to congratulate everyone who's on this call, especially if it's your first time going through this process. This is the first step, and congratulations on taking that first step. It can be daunting, and a lot of times people hesitate to do that. So the fact that you're here is awesome. Just a little bit about myself. I have been in this business helping buyers obtain their mortgages and originating loans for more than 24 years. I'm now a branch manager, so I do manage loan officers and processors, but my first love is and always will be to work with buyers. There's better than sitting across them at the settlement table and seeing the look on somebody's face when they buy their first home. It's extremely rewarding, to say the least. The company I work for, Primary Residential Mortgage, we're a nationwide lender. And we're specifically a mortgage lender. Unlike the big bank do checking, savings, auto loans, things like that. We do one thing and we do it better than anyone else, and that is provide home loans, mortgages. Our company is nationwide lender. We're in 49 states. Our corporate office is all the way out in Salt Lake City, Utah. However, everything that we do that pertains to the mortgage and to your transaction done locally, right here in Maryland. I'm a lifelong Maryland resident, born and raised, and every aspect of this process is done locally, which kind of gives us the best of both worlds. We've got the backing of a big company, but at the same time, the local presence. Mary touched on some things that are unique to Maryland, and having underwriters that live and work here and processors and officers really can make a huge difference. Over the 24 years that I've been working with buyers, one thing has become abundantly clear, and that is that this is not a one-size-fits-all sort of scenario. So to give a presentation about the home buying process is a little bit difficult because I like to dig in to the specific goals, specific scenarios of each individual buyer slash borrower. I need to get more information. However, in the interest of time, I'm going to cut my 85 slide show down a bit and go over some of the basics, and then loven it up for some questions. So with that, I'm going to jump over to my presentation here, and hopefully everyone can see this.
Yep.
We good here?
Yeah.
Yep.
Awesome. Okay. So once again, mortgages basically are one of those things that are, I would call them sometimes a necessary evil if you don't have $400,000 to slap down on a purchase. So what we want to talk about again is the high level stuff. So how do we borrow money? It really comes down to four things. We're going to focus more on the first three because that's what pertains to you as the actual buyer. But it comes down to credit scores, income of the borrowers, assets of the borrowers. And then we've got the loan to value, which really pertains mostly to how much money you're borrowing as compared to the value of the property. So let's jump right in. These are the big ticket items here. I can't tell you how many times I've spoken to people and say, I'd love to buy a house, but I won't qualify. Well, that's not always the case. So what we need to establish is it actually that you don't qualify for a mortgage, or do you qualify now? If you don't, I always say the question is not if, it's a question of when. So let's talk about what it's going to take. So credit history, for example, you've got good credit, bad credit, and sometimes no credit. What we would do is pull a copy of credit report and see what's being reported there, what the scores are, and what type of liabilities are showing up there. So what affects the score? I don't think anybody's going to be surprised to hear that making your payments and making them on time is the number one driver of your credit scores. What you might be surprised to hear is that a close second is what we refer to as utilization of your credit. Utilization talks about how much credit you're borrowing as compared to the limit. So let's say, for example, you have a $3,000 credit limit and you owe $2,995. Well, obviously that credit card is maxed out. Well, that's going to have an adverse impact on your credit scores. You're actually going to lose points for having a high utilization. So I always tell, as a rule of thumb, try to get all your accounts down below 50% of the limit first, ideally below 25%, and you'll note increase in your scores in a relatively short period of time. Number one, paying the loans and paying them on time. If you have no credit, we can work to establish credit. However, we're working with buyers all the time that don't even have credit scores. They literally don't have a credit history, something there to generate those scores. We can use non-traditional forms of credit, utilities, verifications of rent, insurance, anything that you're making regular payments on is something that can establish payment history. Ideally, credit is established on your credit report by borrowing money and paying it back. In these scenarios, you're not actually borrowing money. So if you don't pay your utilities, what happens? They shut you off. If you're borrowing money and you can't pay it back, that's a different scenario. So if there's work that needs to be done on your credit, you know, what's the saying, what's the best time to plant a tree? 20 years ago. Well, what's the next best time? And that's right now. So if you want to buy a home, the sooner we get started on anything that needs to be addressed, the better, the sooner you'll be able to get at home. Whoops. Yep. Oh, I am going to skip that one. I'm going to come back to that. So the next item is income. So this can get a little tricky because not everyone's compensation is structured the same. So people will say, oh, I made $70,000 last year. Well, fantastic. We have to see and take a dive a little bit deeper to see how that compensation is structured. For example, salaried employees, they're the easiest to quantify. We know exactly what they're going to make through the course of that year from start to finish, regardless of what hours are worked, and nothing's going to change. Now, when you start to have variable type incomes like hourly, overtime, commission, bonus type incomes, we've got to average that over a 2-year period. So it's very important that we get supporting documentation and we're able to verify and quantify that income and what is able to be used for qualifying purposes. Mary talked a little bit about the difference between a pre-qualification and a pre-approval. A pre-qualification is a conversation that I have and someone says I made $70,000. A pre-approval is collecting all that supporting documentation and making sure that when you start shopping with Mary, that you can go out there with confidence and say, I know that I'm going to qualify for this because we've already talked and George has told me what that range is. But you want to go out with that confidence and you want to be able to tell the seller and the listing agent, hey, my lender has done their due diligence and I know I'm qualified to purchase this home. And that should happen before you make your offer, obviously. We're going to verify all that again with the supporting documentation. Underwriters are going to look for stability of income. how long have you been in this position? How long have you been with that same employer? We're going to look at a debt to income ratio. So I kind of skipped that. This is a little bit out of order. So I'm going to jump back to that. Another big driver that underwriters look at is the debt to income ratio. So how is that calculated? Really, what we're doing is we're looking at your debt as compared to what that income is. So we take the liabilities from your credit report. Any debt that you have from your credit report is going to show us what that monthly payment looks like. Then we add to that your proposed new mortgage payment. And then we divide that by your monthly income. So we've got a scenario here. Somebody makes $60,000 a year, that's $5,000 a month. Okay, the new mortgage we're estimating to be about $1,000, but you've also got a car payment of $500 and then credit card payments of $200. So now we've got a total liability amount of $1,700. We're going to divide that by the $5,000 a month, and that works out to about a percentage of about 34%. So that is total debt to income ratio. That's a good sweet spot in there, that 34%. Depending on other compensating factors, you can go higher than that. We don't want to set people up for failure. I love all my clients and we have great relationships, but at the end of the day, I'm not the one who's got to make that payment. So I think I'm going to echo what Mary said. Also, what you qualify for and what you're comfortable with can be two very different things. We want to make sure we're checking both those boxes. And when we establish that debt to income ratio, it kind of puts things in perspective. So next, we've got assets. Why do we need assets? Well, we've got to invest a certain amount of money when purchasing a home. Typically, the three things that you need to account for when you're talking about out-of-pocket money are your down payment, your closing costs, and your prepaid escrow items. So down payment is pretty self-explanatory. You can have your purchase price, you put money down, and then whatever's left is going to be your loan amount, very much like you would an auto loan. The second thing are your closing costs, and these are the fees that are associated with purchasing the home and borrowing the money. For example, there's title fees, there's lender fees, there are appraisal fees, there's transfer taxes, and there's a full estimate that I prepare for my clients, and we go through that line by line so you know where all that's coming from. And then we've got grand total at the bottom. Well, where is that money coming from? So you can use your own funds, obviously, checking savings accounts. You're allowed to get gift funds from relatives if somebody wants to help you out purchasing a home. If you own other real estate, use the net proceeds from there. Any investment accounts, retirement accounts are acceptable forms. We're going to verify those assets with bank statements, and we're going to show that these assets are available to be used for this transaction. I'm going to touch briefly on the mortgage program because it's another fantastic option that helps with down payment assistance. And down payment assistance can be used for down payment and or closing costs. So whatever that total number is, and I'm not going to steal anybody's thunder here because I know Catherine's going to talk to you about that, but that is another option to help with the out-of-pocket expense. Cash, unfortunately, can't be used. We've got to be able to document. We've got to be able to source where these funds have come from. So if you've got cash, unfortunately, we can't do that, so it wouldn't be allowable as I said for this transaction. So the last item is the loan to value. We'll briefly touch on this, but this is basically the value is how much money am I borrowing as compared to the limit. Obviously, the lower that ratio is, the better from the lender's perspective because you've got more equity built into that transaction. For example, we've just got this scenario here. If you've got a $400,000 loan on a $500,000 property, well, you've got a $100,000 down payment. So you've got a 20% down payment. Well, I don't know about you, but $100,000 is a lot of money. So you don't have to put 20% down. However, I want to touch on one item if you're not familiar with mortgage insurance. If you put less than 2% down, you're going to need mortgage insurance. Mortgage insurance, unfortunately, does not protect you as the borrower or the buyer. It protects me as the lender. There was a period of time where no bank or no mortgage lender would grant a mortgage unless you had at least 20% invested in the transaction. They came up with this concept of more insurance that helps offset losses from the lender in the event that the buyer defaults on the loan. So again, we can talk more about those details. There's different programs that have mortgage insurance and some that don't, but that's the general rule of thumb there. So what documentation is needed? When we do a pre-approval, we are going to ask up front, again, this is a pre-approval versus a pre-qualification. Right up front, I'm going to ask for pay stubs, tax returns, W-2s, bank statements. There's a whole list of items here. We're going to verify any rent payments that you had to make sure that those have been paid on time. If you've had a bankruptcy or a divorce, we're going to need to see those documents because they can have an impact on your qualifying for this mortgage. Those are items that are going to be needed for underwriting, but why not collect them up front to make sure that we take all the questions out of the scenario when you're shopping and you're making that offer. The mortgage payment itself. Now, there's several things that are included in the mortgage payment. You've got the principal interest, which is, again, just like paying back an auto loan. Most people are familiar with that, except for this loan, instead of 5 to 7 years, is amortized over a 30-year period. So the principal and interest is just paying that loan plus the interest. But also included in your monthly mortgage payment is going to be 1 month of property taxes, 1 month of homeowners insurance, which are going to be required to be paid away. We're going to collect that and pay those when those bills are due. We pay that on your behalf. If it's less than 20% down payment and you've got mortgage insurance, that would also be included in the monthly payment. So you just make one payment. Now, if there are homeowners association dues or condo fees, those are paid separately outside of your actual mortgage payment. When we talk about that, I'm going to include them, but when you get your mortgage statement every month, it's not going to be included in there. Okay, renting versus owning. So we take a little look at this graphic here, and it just kind of puts things into perspective. You've got a $1,200 a month payment. You're going to see annual increases, typically about 5%. And Baltimore and Maryland in general are one of the highest places in the country to rent. So after 5 years, you spent about $80,000 and you really have nothing to show for it. So building wealth comes from certain investing in things that will give you a return on the investment, and they're appreciating assets. So if we look at a relatively same payment, you buy a $185,000 house based on 3% annual appreciation, you're going to be paying the loan down after 5 years, you're looking at a net gain of over $50,000, where if you were renting, that's not there. So what do you do with that equity? Well, if you sell the house, obviously the money's yours, but you can also access that equity with home equity lines of credit, pay off other higher interest debt, or take a vacation, buy a car, do whatever you want with it. But again, that's an asset that you have built equity in. So now that money's not just being thrown away. So first step, we talked about that, and Mary talked about this. The first step is to obtain a pre-qualification, and then, as we see down here, pre-approval. So again, you apply for the loan. We have a very easy, user-friendly website. We just fill out some information. It allows you to upload supporting documentation as well. Once I get that information, then I work on that pre-approval, and then we meet. We meet, talk about all the details, all the numbers, the process in general, and make sure that we're answering all your questions before you even start shopping for a house. Mary's going to talk to you about the specifics of the property. I'm going to talk to you about making sure that we nail down that financing for you so that you can buy that home. Once you see the one, checks all the boxes, you want to be able to pull the trigger on that, and that's what we're going to do up front. Second step is find a house. So Mary takes you out, you start shopping again with confidence. We can, and she did a little bit about local lenders. When you're in competition, and it's a competitive market now, but as a listing agent is looking and reviewing all offers, they're going to know that a local is going to know the nuances of the area more so than somebody from Kalamazoo, Michigan, or wherever they may be located. We are here. We know this market. We know that the agents and all the title companies. So it makes for a much smoother transaction. We're going to run the numbers for you before you make the offer. You kind of have an idea of what that payment's going to look like, but we're going to run these numbers for you to make sure this specific property, this is the most accurate estimate of your monthly payment and how much money you're going to need out of pocket. Then you talk to Mary. Mary's going to walk you through all the inspections and things like that to make sure that everything checks out with the property itself. We go through the loan is disclosed to the borrower. So basically what it means is now we've got a loan package, and we're going to be a ton of different disclosures that you'll see. Most of them are very generic, but the ones that have the specific numbers you're going to pay extra close attention to, because that's what it's all about. We'll then order an appraisal for you. The appraisal is the instrument that's used to confirm the value of the property. We want to make sure that if you're paying $300,000 for a house, that it's worth, in fact, $300,000. That's for your benefit. And I think I'm going to get the hook here, aren't I? I'm going to get the hook, Jackie.
Maybe,
okay, so real quick.
maybe.
I told you, I get caught up. Going to go through underwriting. They're going to see if there's any conditions that need to be satisfied prior to final loan approval, and then you go to closing. So issues, we can talk about that another time. Here's a pre-approval checklist. Any issues?
We do
Didn't
have a
mean to
few
ramble.
questions. You're good, George. This was all wonderful information. That's why I didn't cut you off earlier. The, real quick, we do have a few questions in the chat. If we could just rapid fire them, George, as
Fire
best as
away.
possible, that'd be great.
Sure.
One question, how much can you, if you can, negotiate the terms with an underwriter if you may not agree with some of the terms listed?
Okay, I'm not sure what you mean by terms, but there are guidelines that are set forth by government-sponsored enterprises, and we're going to have Jim's going to talk to us by one of them. Freddie Mac is one of them, and so is Fannie Mae. But they are the ones who really set guidelines. So if you're talking about terms with respect to interest rate and fees, that's one thing that can be negotiated. But as far as guidelines are concerned, they're set forth so that they mitigate any risk to lenders too. So I hope that answers that question. I'm not sure.
I think so. And if there are more follow-up questions for that, please know in the email that will be sent on Tuesday, all of our presenters will be CC'd. So if you have follow-up questions for George or Mary or anyone else, please, you are welcome to contact them after this. Do you still need to have a credit pull if I already know my credit score and can give that information?
Yeah, that is something that needs to be pulled. It's not always just about the score, but the overall credit profile is relevant. So we've got to see, are there late payments? Are there collections? What's the payment history? What's that utilization? That's one reason. The other thing is we send these loans through automated underwriting systems through Freddie Mac. Freddie Mac has a automated underwriting system, and we need to submit that credit report as well. So it is important to have that credit report pulled.
And if I'm not mistaken, George, the information that you may already have, say you're looking at your FICO score, is also not the same information that a hard pull on your credit will be doing. So that's also an important detail to keep in mind.
For sure. There's different algorithms for Credit Karma, and the credit card gives you your credit score. That may look a little different when a mortgage lender pulls that credit report.
Do you have a choice in what accounts are used as assets, or do all accounts need to be provided?
As long as there's enough assets to cover what we need to approve the loan, you don't necessarily have to. If you've got a huge portfolio of investments, but you need $25,000 for this transaction, we need to make sure that you have enough money for that transaction. If reserves are required, we may need to see some additional assets. It's always best to show as much in assets as possible. It just strengthens the overall profile and bolsters the profile.
Can you buy a house on disability income?
Yes. Yes, I'm working with one right now who's going long-term disability. So that is something that can be used for, we've got to, look and see, is this something that has an expiration date on it, or is it something in perpetuity? If typically the rule of thumb is 3 years, we want a 3-year continuance of this income. And as long as we can establish that, yes, we can use that.
Wonderful. All right, we do have a couple more questions, but we do need to move on. So if we have time at the end, we will come on back. But thank you so much, George. And we're going to hand it
My
over to
pleasure.
Jim.
Stop sharing. Stop sharing.
Jack, you're doing for the citizen of Maryland, and people are really for tuning in.
Oh no, Jim, I think you're breaking up a bit.
You're getting valuable information, and oh yeah, I'm having some Comcast Xfinity issues here.
We're getting a couple chunks every now and then.
Can you hear me now, or
I can't hear you.
how about
Yeah, you're going
I
in and
could
out, Jim.
in and out. I'm so sorry, Jim.
if I call in? Would that be okay? And
Yeah, that works. Here, let's Catherine, maybe we go to you and then Jim, you can call in and we'll get you up after Catherine. All right, Catherine, we're gonna have you go ahead and get started.
Okay. All right. Hi, everybody. My name is Catherine Kramer Dale. I'm with the State of Maryland Department of Housing with the Maryland Mortgage Program. And I am a state agency. You do not apply directly with my state agency. That's why we have such strong partnerships with our lenders, as well as the agents, as well as Freddie Mac. I'm going to share my screen right now, and I'm going to show you how you actually apply for the Maryland Mortgage Program. And George, you definitely could have stolen my thunder and talked about how amazing our product is, because Primary Residential is one of our top performing lenders. George literally could do this with his eyes closed. So you're in good hands. This is our website. It's www.mmp, which stands for Maryland Mortgage Program, .maryland, MARYLAND.gov. This is a public website. Now, yes, it clearly is designed for our lending partners and our agents, but anybody can get on here. So I'm sharing this information with you. When you get on the homepage, I refer to this as a maroon color. Obviously, there's row homes. You actually scroll to the bottom and hit on here, talk to a lender. But honestly, you have George right here. So he's fantastic. But if you weren't on this call and you wanted a lender, still refer them to George. But here's where you actually work with the Maryland Mortgage Program. You don't apply directly with us. You apply directly with one of our amazing lenders. And you have George right here. He's going to share all of his information so you can contact him. You've got Mary on here, who's the agent, who's going to help you find the American dream home that you love, that your cabinet, where your china cabinet will fit. With the Maryland Mortgage Program, I'm going to go right to interest rates. When you apply for a mortgage with a lender, George is going to ask for all the items that he referred to. What's all your income? What's all your assets? Pull your credit to make sure that you are demonstrating the ability and the willingness to pay your credit on time, that you have a good credit score. For the Maryland Mortgage Program, the minimum credit score that you need to apply to use our program is 640. All right. When you apply with the Maryland Mortgage Program, you're going to give all the information to the lender. The lender is going to say, I have a borrower who I think would really benefit by using the Maryland Mortgage Program. When you do a Maryland Mortgage Program loan, you do not have to be a U.S. citizen, but you do have to be eligible to work in the United States, and you have to have a valid Social Security number. We do not allow any co-signers. So even if you have grandparents or your mom or dad and you're blessed with somebody saying, we'll co-sign for you, we do not allow that. If you are on the loan, you have to be living in the home. With the Maryland Mortgage Program, you are using this product to buy your primary residence. So as long as you have a loan with the Maryland Mortgage Program, you cannot rent out this property. If you decided that, you bought a townhouse and now your family's growing and you want to purchase a single family and you want to keep this townhouse and rent it out, you can, but you have to pay off the lien. You have to pay off the loans that you have through the Maryland Mortgage Program. You cannot own anything or have any interest in any property anywhere in the world at the time of this closing. This has to be the purchase for your primary. We have to make sure you don't own anything anywhere else so that we know you're going to move into this house as your primary residence. Now, sure, after closing, if you want to buy a place at the beach, yeah, that's fine. But this has to always be your primary residence. We don't want you to use the program and then turn around and flip it and make it an investment property. That's not why we're here to help you. We're here to help you buy your primary residence, the American dream, right, of owning a home. These programs are available for anywhere in the state of Maryland, the entire state of Maryland. We have 6 guidelines that you have to qualify for. Now, with the lender, you've got to meet FHA, VA, USDA, or conventional guidelines. That's why George is asking for all those documents. Because again, like he said, he's then putting the loan through someone else to make sure it's proven, it's meeting the guidelines. With the Maryland Mortgage Program, George is also going to be very specific and send us proof that you are a first-time home buyer. If you're not, that's okay. We have a program called the Flex. You don't have to be a first-time home buyer. You still can't own anything anywhere in the world, but you don't have to be. But if you are a first-time home buyer, you'll notice that the first-time advantage products, you get lower rates. These rates are very pretty right now. Very pretty. We don't allow you to buy up or buy down the rate. We don't charge you any fees. There's no Maryland Mortgage Program fee. We're a state agency. We're public servants. We're here to provide you a program to help you with your down payment and closing cost. Now, like George said, you could get a loan with us. This is the rate for your first mortgage, and then you could get $6,000. That $6,000 is recorded as a second lien. It's not a grant. It's not a gift. It doesn't magically disappear. You have to pay the first mortgage back when you sell or refi, and you have to pay back the $6,000 that you borrowed from us when you sell or refi. We don't charge you any interest on the $6,000. You don't make any payments on it. So whether you sold or refinanced your house a year from now, 5 years from now, or the entire term of 30, when you either sell or refinance your house, you got to pay off the first, you got to pay off the second. But we don't charge you interest and you don't make payments on this. It just kind of sits there like silent. You could get 3% of the total first mortgage, round down, no change. You could get 4%. The most popular product right now that we're finding is the 5%. 5% of your total first mortgage is a heck of a lot of money. And that money can be used to help you with down payment and or closing cost. So when you're talking to George or you're talking to Mary and you're like, I pay my bills on time, I've got great credit, I really want to stop renting, or I want to move out of my parents' house. I really, really am ready to purchase a home, but I just don't have enough savings. That's where you're going to think about the Maryland Mortgage Program, and the lenders will help you. We have another product that offers you 6% of the down payment and closing cost, but your qualifying income is lower, and George will help you determine if you're eligible for that. We have a product that is specifically designed if you are buying in Montgomery County and you meet those 6 guidelines. And if you work for a Montgomery County agency, you get $25,000 to help you with your down payment and closing cost. And this Montgomery County program, when you go to sell or refi, well, I'll just say when you go to refi, we'll allow you to subordinate. What that means is you don't have to pay the 25 back right away. We'll just transfer it to wherever you're refinancing. The Maryland Smart Buy is winner, winner, chicken dinner. Now, this credit score is higher than 640. It's 720. But when George pulls your credit and he says, man, you got a credit score of 720 or higher, great. We want to help you buy a home. We want to offer you down payment and closing cost assists. And guess what? I notice you have student loan debt. We're going to help you pay off your student loan debt. I could talk for hours with you guys, and I do trainings all day and every day, and I do the trainings for all of the lenders as well as the agents. And we want to make sure that when you're working with all of the partners that offer the Maryland Mortgage Program, that they are providing you the best possible information so you can tap into using a state program to help you with your down payment and closing cost. Definitely reach out to George. Get your pre-approval, go shopping with Mary, find that perfect house that you are so in love with that your china cabinet will fit in. And guess what? The state of Maryland has helped you with down payment and closing costs. And like Mary said, you guys, for real, this is not hard. You have some professionals on this screen that are sitting here at 7:30 at night. And we are here to show you that we are invested in helping you move and purchase a home. Everybody deserves a home. Everybody deserves a home. And don't think that there aren't programs out there that will help you. And George is going to roll his sleeves up. I know the man. He's going to roll his sleeves up. And he's going to tell you not only about my programs, the state of Maryland, but he's going to tell you about programs in the city and the county where you are buying, because there's all these buckets of money.
And you can bundle them. You can layer those different programs.
Stack them. Yep. So listen, I know you got the uncle and the brother and the mother and the friend that swears they're looking out for you, but we are licensed, we are certified, we are educated. Rely on us to help you achieve the American dream of owning a home. Thanks. All right, Jim,
Thank you so much, Catherine.
Yeah, I try to talk quick. I'm
And
used to
you do
being
a great
the last.
job.
All right, Jim, you with us?
Jim?
Well, listen, Jim has great slides. He really does. We did a presentation today, and they are one of our strongest partners, Freddie Mac. They have a lot of programs. They will definitely, if you share the slides, great resources. And if you email Jim, guess what? If you give him a phone number, he's going to call you or he's going to email you back. Right, Jim? Yep. I've worked with him for years. He's fantastic. So, Jim, I just did a little segment for you. Okay.
Yeah, we will email out the slides from all of the presentations today. So please, like you will be able to review them and look them over. And also, if you really want to see Jim's presentation, you are welcome to go to our YouTube channel. We have the recordings of all of our past webinars as well. So if you want to go skip ahead to where Jim comes in, you're welcome to. He has some really great information about home buyer education and the programs through Freddie Mac that really benefit first-time home buyers and just all home buyers.
Yeah.
On that note,
Jackie, can you hear me now?
There you are. Yes, now I can hear you, Jim.
Okay. Okay, I'm coming in through AT&T now. I apologize. Comcast has gone down in my area. They're working on it. If people want to hang around for a couple minutes, do you want, Jackie, you have my Credit Smart slides. Do you want to pull them up?
Yes, give me a moment and I
Okay.
can do that.
And audience, thank you for hanging in there. You've heard great information from, industry experts, especially George and Mary. They are on the front line. Freddie Mac is a government-sponsored enterprise. We're a mortgage company, but we don't lend directly to the public. So I'm not in competition with George. We're what's called in the secondary market. So what we do is we buy mortgages from companies like Primary Residential and housing finance agencies. like the DHCD and the Maryland Mortgage Program. So we provide liquidity into the marketplace. So one of our major pillars here at Freddie Mac is financial literacy, education for you. And Jackie, do you have the Credit Smart up on the
Yes,
screen?
I have the first slide up.
Perfect. Now everybody, this is our financial literacy course for you. It's free of charge, no cost. So you're going to walk away tonight with something that's very, very valuable where you don't have to pay $1 for. So on the first screen here has the Credit Smart website. And, you know, what we did, we broke down this course into two sides. If you can go to slide number 2, please, Jackie. And that is the financial capability side and the homeownership education side. So the financial capability side has the essentials, and that is something that you will be able to keep through your whole homeownership journey. The homeownership education side, that's the home buyer you. That's for the immediate process, for when you're working with Mary and George to go through the home buying process and the mortgage application process. And if you can go to slide 3, please, Jackie. This just shows you that you can personalize this website, you know, to your own name. You can track your progress, set up a notebook, set up goals. It's very interactive. It's not something that you just do in one sitting. There is a pause button, so you can get up and, you know, walk away for a day or two and then come back to it and get this great information. So Jackie, if you can go to slide 4, this will illustrate the essentials learning path. And like I said, this is the one that you keep for your whole homeownership journey. It helps you setting goals. It explains the importance of earning and spending, being a savvy borrower, planning to save, and preparing and protect. So it's very important to budget because, you know, you buy that house and there's so much more to it. You have to furnish it. You have to get, you know, all the items that take care of your yard. And so it's, you know, very important to learn what a debit and a credit is and to make sure that you're not overspending. And it's also important to, you know, really establish some savings, get a rainy day fund. And because, you know, emergencies can happen. I've been a homeowner for 35 years. And, you know, if your water heater goes and floods your basement, you need some quick cash. It's great to have a rainy day fund. And that happened to me 2 years into my first home. So I'm speaking from experience. And also, you want to prepare and protect because this is probably the biggest financial decision you're going to make in your lives. And it's important that you understand the importance to make that monthly payment, gain equity in your property, and then ultimately be able to pass down something to your loved ones, you know, through the generations. So if we can go to slide 5, Jackie, this is for the immediate part, the home buyer you. This is only 6 modules. It shouldn't take you anymore from 2 to 3 hours to do. And once you do this, you know, it will take you through the home buying process, the mortgage application process, and you will get a diploma or a completion certificate. Once you pass the test at the end, you have to achieve 80% or higher. And that diploma is good for 12 months, and it meets national industry standards for homeownership education and counseling. So I used to be an originator. So if I'm sitting in George's chair and you're my client, you took my advice, you did Credit Smart, you got the completion certificate, you passed it, I know it's go time. It's time for me to get that mortgage application approved and closed for you so you could buy your house. And again, this comes to you at no cost from Freddie Mac. After this webinar, you know, please take advantage of it. You know, it's our gift of knowledge to you. And with that, I'm done, Jackie. So that was the fast version.
Thank you so much, Jim.
Okay.
All right. If our
And-
presenters are able to stay for a little bit longer, we do have some questions that have come in the chat that we're going to try to get through as quickly as possible. Thank you all so much again for your time today. All right, we're just going to go through these as quickly as possible. Radon and termite inspections, are they required?
But that's me. I'll take that one. Required is a strong word, right? But certainly highly recommended, right? So a termite inspection is going to be $100 or less, depending on who you use, right? But finding out about that damage can cost tens of thousands of dollars if they've really eaten something important in the house, right? So it's always recommended that you do any of the tests that could be a concern for you. If you're not familiar with radon, there's a lot of resources online. Same kind of thing. Radon test is about $150, right? Most remediation for radon is going to be about $1,200. And if you do that prior, that's something that seller is more than likely to take care of, because they would then have to disclose that to future buyers if they found out that they had high radon readings. So certainly if it's something where you're going to be downstairs doing laundry, your children are going to be down there, I always recommend better knowing what you're purchasing ahead of time than waiving those and dealing with it later.
I will jump in real quick. Certain financing does require a termite inspection, VA financing. If anybody's a veteran, thank you for your service. And if you're utilizing VA financing, you're going to need a termite report, but most do not. Sorry to interrupt.
Thank you. Is there such a thing as negotiating too many conditions with the underwriter, George, to the point where the underwriter may not negotiate anything further?
So negotiating, we have guidelines that we have to follow now. There is no nonsense type underwriting and common sense underwriting. So there's certain things that are really that could very well be a deal breaker. For the most part, we're going to look for any possible way to make sure that this works. Once again, it goes back to I think Catherine touched on it. Ability to repay is one thing. We need to be comfortable as a lender before we're lending our money that you have the ability and willingness to repay. But we're working with everyone. Our goal is to try to get this to the finish line. So I'm not sure about negotiating, per se, but we've been able to work with. But let's put it this way. I've worked with buyers on countless occasions where they came to me and said, another lender turned me down. And I've said, let's take a look. And our underwriters being local, they came into our office. We got in the conference room. I sat down with them. I said, hey, let me call Margie in here. She's our head underwriter. And let's sit down and hash this out. We were able to make it work.
Yeah.
So there's some times where an underwriter or a lender will say, hey, this doesn't work, next. We're saying, okay, this doesn't look like it works. How can we make it work? And if there's a way to make it work, we're going to find it.
Right. And that's why too, I'll just jump in too. I mean, I have 140 some lenders, but that was something that Mary pointed out. When you're working with somebody that's local, whether it's your agent or your lender, that speaks volumes. We're all here to try to make it work. We're not here to be like, no, oh no, we're going to try to make it work. But again, if you have the opportunity to sit down with the lender and directly talk to them, they'll figure it out. Yeah.
Thank you all. Also, I believe this was during your presentation, George, but someone just wanted a quick refresher on what step number 5 was.
Hang on. Step number 5, I had to go through it because Jackie gave me the hook. Oh, conditions. So once you submit a loan to the underwriter is the one that actually stamps it approved and goes through with a fine-tooth comb to make sure everything has been verified and everything meets all the guidelines. We try to give the underwriter everything they need up front. Does that ever happen? No. And so what happens, and some of these items, when we submit to underwriting, haven't even been done yet. We may not have title work in yet. We may not have the appraisal. They're going to underwrite the file, and they're going to say, hey, everything looks good here, but we have a couple conditions. One is we need to make sure that appraisal comes in. We need to make sure the title comes in clear. So those type of things. Or, hey, we're missing a page of this bank statement. That's a condition. So we work with you after that. So you get a conditional loanable. So those conditions, we start working on them with you. We get everything and we give it back to the underwriter. They check, check, check. Now you are clear to close. Once you're clear to close, then you've finished with everything. And now we're just waiting for the fun stuff and we're just going to settlement.
Wonderful. Thank you. All right, for Maryland Mortgage Program, are there any incentives for having a credit score higher than 800 or any benefits to having that higher credit score?
Well, our guidelines are pretty straight across the board. So the minimum credit score requirement is 640. If you had a credit score of 720 or higher and you had student loan debt, that is a huge incentive because we will help you pay off your student loan debt and therefore you won't have it anymore. But other than that, no, there's no other incentives. And then even the next question, what happens if you don't pay it back after selling or refi? The state of Maryland Department of Housing, we don't run out of money. We don't. And so we're lending this money at no interest, and you don't even have to make any payments on it. And you could be in it for 30 years. But the reason why we don't run out of money is because you have to pay us back. We don't charge you any interest, but you have to pay us back. Now, if God forbid something really happened and you had a hardship, it was a serious hardship, yeah, come reach out to the state. You know, there are always situations where we'll figure something out. But think of it this way, if you owe the state of Maryland money, they want their money back. Yeah. And are there discounts for bundling all of them together? For me, I'm going to say no. So we will allow you to bring all these buckets of money together so that you have all this money and you're not even having to bring your pocketbook or your checkbook. And our rates are our rates, so you're not getting any discounts. But George, I don't know, are there programs out there where there are any other incentives?
So when you say discount, so we allow you to lay out these programs. So in other
Right.
words, if you get the $6,000 from the Maryland Mortgage Program and you're buying something in Baltimore City and you get another $5,000 on top of that, and
On
then
the
you have
city.
live near your work or something
Yeah.
like you can stack all those on. I mean, I've done loans where we've covered the minimum down payment, all the closing costs. Now we're just lowering the loan amount. Because these grants and these down payment assistance programs are adding more value. So yeah,
like
there's certainly an advantage.
Yeah, that's a good thing too. If you get all these buckets of money and you have money left over because you don't need any more for down payment and closing costs, it's just like buying a car. You could put more money down on the car, so it lowers the loan amount, which lowers the payment. It's the same thing with a mortgage. If you want to put the money that you have that you got from all these different programs, as we call it a principal reduction, you're just lowering the loan amount. So that could be an initiative, incentive. Can you have a partner and buy a house with applying to the Maryland Mortgage Program? Yes. You don't have to be married. So you can be married. You can have anybody that's on the loan with you, whether it's your partner, your family, a friend, your brother, your uncle, whoever. Yes, that's great. They just have to live in the home with you. Okay, perfect. Yes. All right. All right. This one is for George. What happens
Yes,
when
what happens? Yeah,
Yeah.
sorry, Catherine.
No, go
What
for it.
happens when you have a small business and there are no W-2 forms? How do you get approved for a mortgage?
Very common. This is a scenario where we're going to look at the last 2 years of tax returns. If you're just filing a Schedule C, then we'll just get your first tax returns. If you've got a corporation or an S corp, then we'll need those all schedules of those tax returns. And then what we're going to do is we're going to average those 2 years. Now, there's a very specific formula, and Jim will know about this too. Freddie Mac has a specific formula that we use. We've got to look and say, if someone says, well, I made $100,000 last year, and then we look at their tax returns and they show write-offs and expenses of $30,000. Well, what you're really saying is it cost me $30,000 to make $100,000, so I really made $70,000. Now, there's certain items that are write-offs that can be added back into that scenario, even though you're deducting them for tax purposes. Oftentimes, we can add some of that back in for qualifying purposes for the mortgage. But basically, we're going to look at the tax returns. W-2s wouldn't be can come into play in that scenario.
And a year-to-date P&L. Yeah.
Sometimes not even that anymore.
Yeah. Okay. All right.
Yeah, we've gotten good with that too.
Okay, good. How can lenders
For
get
MMP, you would need it though.
how can you get
For
incentives
MMP,
from other
and
counties?
that's 3 years.
Yeah. So
I'm sorry?
George can even answer this. How can you get lender incentives from other counties?
How can you get? You would just apply, very much like Catherine talked about. You would apply with the whatever entity is offering that down payment assistance program. We hold your hand, so to speak, and we help with that process too. But you've got to apply to each individual one.
Yeah.
And
So
they have their those guidelines can vary too.
So we're the state of Maryland Department of Housing, but in every city or every county, there is a Department of Housing as well. So there's money within the city or county that may have programs to help you buy as incentive in their county. And then you can also stack it with the state of Maryland.
And there is information about these programs that both your lender will be able to answer questions about, and they are on marylandhomeownership.com. So if you want to go ahead and look around, see what might be available, that's a great place to start, and then you can follow up with the lender when you're ready. All right, we have finished all of our questions. It is now 7:47. We are well past our end time, but this was a wonderful presentation of so much crucial information. Thank you all so much, and thank you so much for giving extra time to us as well. And thank you all for your attendance. As a reminder, our next Your Home Buying Keys webinar is on March 13th from 6:30 to 7:30, though maybe we'll run late next month too. Please share that day with anyone who you probably will. Please share that day with anyone you think would benefit from this information or soon to be home buyer in Maryland. Be sure to check out marylandhomeownership.com for more resources and information on home ownership. We wish you all the success in your journey. And if you have any questions, please email webinar@mdrealtor.org. Thank you all so much. Have a great evening.
Thank you, Jackie.